Hey everybody, today's April 23, 2024, and today we're going to talk about the stock market and where I think the stock market is headed for the month of May. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so last time we left off around here, right? Late March. And my prediction was basically that I thought that this incredible rally since the October low of last year was looking really good, but at the same time, if you see the monthly scale, right, we were basically up 5 monthly green candles in a row. So my prediction was that this month would probably pull back. And my prediction was that I thought we would at least pull back to the 50-day moving average, which is the silver line, right? So we ended up pulling back a lot more than I expected, and a lot of that is due to the inflation data being a lot higher than expected. So my last video, I also said that if inflation is cooler than expected, we could probably see it move sideways at the very worst and move up higher, or at least, or at the best, just rip up higher, right? But if inflation data was hotter than expected, meaning that the expected rate cuts is going to go down, the probability of having multiple rate cuts this year would be going down, then the market would probably come down, right? Because that would mean the rate hikes will probably remain elevated for a longer period than we've expected. So it ended up happening that we ended up going up a lot higher than we expected. The CPI print was a lot hotter than expected. And so what we've seen basically is this trend starting at the beginning of this year until now, where the inflation is starting to creep up slowly, right? And a lot of that has to do with, geopolitical conflicts, in the Middle East, right? And of course, just higher creeping inflation and it's just a tough time for a lot of people, right? Which is sort of disappointing because we were seeing this downtrend, right? We sort of saw inflation peak in the summer last year, and they started coming down, and then just starting from late November, December, we started to see it go up, and then we thought that was a short bounce, and then it came down to 3.1, and so I thought there was a good chance we would go down, right? But of course, we ended up creeping up higher. So right now, during this year, we're seeing the trend go up. So hopefully this will be the peak and we'll start to come down, and we'll get the next inflation CPI data on May 15th, and I'll definitely update you for that. But for now, we have to give benefit of the doubt to the bears because they're pushing up down right now, right? And they push down to the 50-day moving average below to the 100-day moving average. But we're starting to see a nice bounce here. But for now, we basically broke in this structure, this channel structure. And in order for us to convert into bullish, I want to see the price action break above the 50-day moving average, which is the silver line, right? Once we break above and come down, perhaps retest and hold it, then I will probably revert to being more bullish. But for now, we have to give benefit doubt to the bears, right? We haven't made this is a potential higher low, right? Coming down from here, but we still need confirmation to break above the 50 week. Right now, I am pretty confident that this will hold. However, it's still good to be objective as possible and just look at the chart for what it's telling us, and that is that we broke below the 50-day moving average, and as long as we stay below the 50-day moving average, we might see a scenario where it comes up to test and it rejects. If that happens, we could probably see it come down lower, right? At least to this Fibonacci support level. But hopefully we're able to break above, and it's probably not going to happen until sometime next month. But we can break above, come down, retest, and push up higher, then I'll be more bullish, right? And then we can try to retake the previous all-time high. But for now, with the inflation data being a lot hotter than expected, we went from having the expectation of multiple rate cuts, maybe like 3 to 5 rate cuts, to now people think we might only have 2. Maybe we might not have any at all, right? Now this might not necessarily be a bad thing, at least in the short term, right? Because if you look at history, every time we have a rate cut, there's usually a recession that falls, right? So will history repeat, right? Most likely it will be, but I do think that there's a good chance it might be a shallow recession because we've seen a lot of pain in the economy, right? Like the cost of living has just gone up. People are really hurting, right? And so we might be having sort of like a silent recession where it's not an official recession, but people are experiencing it. And that might sort of like price that into to the data if it does come out that we do have a recession. It might not be as bad as people expect because we're sort of living through a silent recession right now, right? But yes, for now, the rates remain pretty high, at least compared to like the last 10 years. But again, if you look at the history of the Fed funds rate, right, it's been pretty elevated back in like the 80s and 90s, right? We're around the same level as we were in the 90s, and it was a lot higher in the 80s. Now, granted, the trend was onto the downside, right, which is, of course is bullish for the stock market, but we've had times where the stock market ripped up higher while rates were elevated, right? So that's just another thing to think about. But for now, with the market basically pulling back for the month of April, we do see the sentiment going down to the fear side. So this is possibly a good entry point if you do think could be a play for a mean reversion or a dead cat bounce. We have filled out this gap, which is good for SPY. Just over here. But like I said, I do want to see the price action retake the 50-day moving average, right? Which will probably happen sometime either late this month or early next month, right? And if we're able to hold the 50-day, then I'll definitely become more bullish. But for now, this could end up just being a bear bounce before heading lower. Again, another important level is the 100-day moving average, this gold line. We definitely want to hold this line. We didn't touch it, but we came close to it and bounced, right? But yeah, just another thing to think about, right? So let's zoom out a little bit. Look at the weekly. We're down 3 weekly candles in a row. With the oscillators, the RSI is pulled back from overbought, right? And now it's getting closer to neutral, right? It's in 60 right now. The daily, of course, has come down, right? We just almost touched the 30, which is oversold, just barely, right? So again, when it comes to RSI, we also want to see the RSI bump above the 50, right? In a bullish trend, the RSI is usually above 50, in this area, right? 50 and above to overbought zone, right? It's not necessarily a bad thing to be overbought. A lot of times a strong bull trend will have the trend be in overbought territory, right? But it is healthy for it to pull back. And as long as we keep above the 50 on the RSI, that could be a strong, great place to buy back in. But of course, the RSI is telling us, since we broke below the 50, right, that we want to be a little bit more cautious because this could end up being a trend that continues down lower, right? Remember, the last time we broke around 50 around earlier this month, right? Now, if you look at the last trend, we also broke down 50 over here, right? And that ended up being a trend that kind of went down even more, right? And so this bounce ended up being a trap that went down lower. So are we going to see something similar like that, right? Where it just comes down lower? Possibly, but if we're able to, again, take up the 50-day moving average, come above, find support, and then push up higher, I think that we will nullify that, and the RSI will definitely rip up above 50, and it'll be a lot more bullish, right? Zooming out even more to the monthly chart, right? Let's get a cleaner chart. Again, in our last video, we talked about how we were 5 monthly green candles in a row, and I said that I wouldn't be surprised if this next month or the month of April would be red, and maybe even May too, right? It's healthy to have pullbacks once in a while, right? Previously, in spring to summer of 2023, we had 5 green monthly candles followed by 3 red monthly candles. Now we have another 5 green. Are we gonna get 2 more red monthly candles to the month of June? Perhaps. But again, it depends on inflation data. Remember what we said about summer of last year, where we had inflation. Inflation went up, right? It peaked in September before coming down again. If this is the peak, and if May shows that we are going down in inflation, and of course it's confirmed by another lower CPI print in June, then this could potentially be the bottom, right? We could potentially be reversing here. So just to summarize, my position is that I do think that for now we should give benefit of doubt to the bears, right? We did come down. It does seem like we're getting a relief rally, but again, this could be a trap, just like we saw here, right? We saw RSI break below 50 here, also here, and it still went lower. So what we want to see is not only a break above the 50-day moving average, which is the silver line, but we also want to see it come down and hold, because like again, we saw last time back in August of last year, we saw it break above the 50-day, but we weren't able to hold above, so we went up plunging even lower, right? Taking out the 100-day. So we want it to break above and hold, and then push up higher, up to new all-time highs, right? We also want to see the CPI data on May 15th, which I'll also update you on the next video next month. We want to see the inflation trend go lower, right? And so that data will come out next month. And also fear and greed index, we want it to move up a little bit more, right? As the bulls gain more confidence to push the market higher and place more bullish bets, right? So that's my view. But of course, if the CPI data is a lot hotter than expected, if there's more geopolitical tensions, right, that can put downward pressure, right? And I think that the first level to test, of course, before that is the 100-day moving average, which is this gold line. If we break below that, we're going to have the Fibonacci support area. If we break that, then of course it's a 200-day moving average, which is a very important long-term moving average that a lot of institutions look at, right? But that's a little ahead of itself. That might take a month or two to play out if we do end up going down there. But for now, I remain cautiously optimistic. I do think that this bounce, we might have a chance of breaking through, right? Again, the key level is the 50-day moving average. If we're able to break through and hold, then I can see it going higher. If we hit it and we basically get rejected off it, I do see it going down lower. And so that is basically my prediction for the month of May. And I'll definitely come back at the end of the month to update you on the CPI results and also where my predictions for the month of June are. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.